It's Jobs Friday, and focus has been on the headline nonfarm payrolls figures. We saw a pullback in that reading for the latest month, so joining me now is Peter Cardillo of First Standard Financial. Peter, happy Friday.
Good to be back.
Well, we started out today's session with the jobs figures being digested. Now, we saw the effects of weather affecting non-farm payrolls, but at the same time, the unemployment rate fell to 4.2%. So what do you make of the jobs figures?
Well, look, there's no question that it was weather impacted. You know, this is the first time that the job market contracted in about 7 or 8 years. Basically, I had been looking for an 8 cents rise in hourly wages, and it topped it. It came in at 12 cents. And so, you know, that to me tells me that the job market is getting tighter and tighter and tighter. Even though we saw the participation rate basically hanging around the levels. Unemployment actually fell to 4.2%. So this tells me that while this is just a 1-month event, that the Fed is probably going to raise rates in December. So I think that, as far as the job report today is concerned, it's just an aberration due to weather.
And when we take a step back, we know it's all about the Fed rate expectations as well as what we can get out of Capitol Hill before year end. But at the same time, next week brings a handful of earnings from the big banks. So what do you expect for the upcoming week?
Yeah, well, of course, earnings come into the picture. We do have some macroeconomic numbers to look at. I mentioned the CPI, and also we have retail sales. And, of course, there again, we might see a murky number there due to the effects of the hurricane. But nevertheless, the rest of the country is probably not going to be affected, other than where the areas that the storm did take place. But then again, there's the other side to it, that eventually we're going to begin to see, rebuilding, and that means more products being bought. And so that probably means we can see a healthy number during the month of October, as opposed to what we see for September.
And last but not least, before we wrap it up for today's interview, I do want to talk about political uncertainty. Now, today we saw the British pound get hammered, and this does come amid speculation about Prime Minister Theresa May's future. Also, there's uncertainty about what will happen in Spain in terms of Catalonia. So how do you see this playing out, not just in the FX markets, but overall?
I think the headlines are going to get uglier as far as that is concerned. They vowed to declare independence as early as next week. That probably will have a psychological and ripple effect. You'll probably be hearing more about Scotland, and then possibly even other parts of Europe and even Italy. How is it going to impact the euro? Probably keep it on the defensive, but I don't think we're looking at any major declines in the euro at this time.
Okay, Peter, well, thank you so much for weighing in on the jobs report as well as your outlook going forward.
My pleasure.